What makes a good crypto project a good crypto project?
Tokenomics. You keep killing me with these questions in the beginning of the episode. I mean, give me time to breathe, man.
Okay,
I'm gonna
take a couple of seconds.
Yeah, so it's probably tokenomics. It depends on the purpose of the token on the project. Because meme coins, you don't need any of that shit. But I'm talking about the general idea.
You used to need.
Yeah,
Like,
you used
think
to.
of meme coins in 2021. They
Yeah.
all had a white paper.
Yes. Fuck the PDF white papers.
Yeah,
with
PDF white
designs
papers,
and
like with Floki, whatever. You know,
had
they would,
PTSD.
and they all would have like some sort of gaming
yeah.
beta plan.
Metaverse. You remember the metaverse meta?
Of course, I remember. And then like a NFT collection for early holders, stuff like that.
Do you also remember the grammar, like the grammatical mistakes that they had?
Yeah, that's like that was one of the ways to see whether it was going to rug or not.
Yeah, fucking
like before we had all these
ChatGPT shit,
GN tools to tell you whether you're gonna get rugged or not. But like, I miss that time.
I miss that time as well.
Because
it was
at least
simpler times.
You could tell that there was a bit of an effort, but not just in terms of developing the token, because you didn't have a pump fund to just click a button and launch a token. You had to know the programming language to launch in that specific chain, or pay someone to do it for you, which meant that it was harder for you to launch a token.
Yeah.
And then these developers would then go on and make these websites. They would make these PDF decks, like the roadmap, the white paper, and stuff like that. But even if I got drugged at the end of the day, it still showed to me that they put some effort into it.
Yeah, a few hours.
I'm not like promoting or anything like that, rugging. But I'm just trying to say that even getting rugged
felt
back
better.
in 2021, it felt a bit better.
You got the adrenaline rush.
Yes, at least. Because you would like make the investment because you believed in it.
Yeah.
But today you see a funny name, and you see like token allocation, and that's all basically what you need.
Yeah.
You look at, they don't even have a website. They have a link, for example, of a TikTok video that went viral.
Or a community on X, which anyone can open. It's crazy. I mean, the way that I think this is value extraction at its finest. Because if we dive deeper, most of the meme coins that have been successful these past couple of months, let's say, or past 15 months, let's say, right? Not only successful, even the rugs, but that have had their ride, right? That have reached the millions. Most of them are probably, can probably trace back to 100 people. And that's the cabal that everyone talks about. That's the Illuminati of this space. And I think that's the cancer of this space as well.
Yeah.
Because maybe a lot of people made money, but that's value extraction at its finest. And I'm not against meme coins. I'm a degen all the way. I trade meme coins. I'm gonna continue trading meme coins. That's basically gambling at this point, but still. But I'm just never gonna get used to a few people just front running the whole show, slowly draining the liquidity out of the market, having those coins bleed out, and then buying back with a smaller percentage, so it pumps, and then speculation and hype, and then this and that. Because I also love altcoins. I also love builders. That's what I've been trying to tell everyone with these podcast episodes. Like, I know the potential that this industry has, although I'm not technical. I know that I keep mentioning that fact, don't I? I know that meme coins, the way they're moving right now, then it's so unsustainable that it could fuck up the whole industry.
Yeah.
And we're gonna probably be left with only Bitcoin, Ethereum, Solana, and that's it.
Yeah.
And that's not how I envisioned the future of crypto back in 2020, 2021. But yeah, I mean, value extraction, that's what's killing me right now, but fuck it. Today we have a guest.
Yes, we do.
And the guy specializes in growth.
Yes, he does.
And he's probably here to answer some of the fucking questions that we have about these specific issues.
Yes, he will.
May we join the call?
Yes, we may.
Hallelujah.
Hello, Jake. How are you?
I'm good, man. I'm good. How are you? Thanks for having me.
Good, good. I mean, we appreciate you finding the time to join us today for this episode. And Atis and I were talking about earlier about what makes like a good project, like the whole journey in terms of both community, in terms of the back end stuff and all that. And we're really excited to have you. I mean, we're really excited to have someone from Magnet because we like what you guys have been doing for other companies as well. You've come up with the Magnet method that has proven to be quite useful for Web3 projects. But before we go into details regarding that, I want to hear a bit about like your origin story, how you started crypto, how you transitioned into what you are doing right now. I know that you joined like during the ICO boom in 2017, if I'm not mistaken. So yeah, feel free to talk about that. I mean,
Yeah, for sure, man. Yeah, I think my first real experience in crypto was when I had my first business. So I've never had a job, famously. I've only ever tried to run my own stuff. And when I was 17, I set up my first proper company. And the first few years went quite well. I dropped out of university to pursue this first business and I moved to London. And the guy below me was a crypto influencer. And this is in 2017, I believe. So he was super bullish on crypto. He knew so much about crypto. And, even from what he's gone on to do in the space now, goes to show kind of how deep he was in the loop of crypto from the beginning. But yeah, being friends with him, he was always like, these coins are going to do well. This is going to do well. And that kind of got me in. My first company was in education, financial education. So I knew about crypto from there. And I had bought crypto before this guy, but he's the one who really pushed me from buying, let's say, normie cryptos into, which I was doing when I was in my first year at university, to really exploring the space more. And then I ran that company for 4 to 5 years. It didn't work out in the end, but it's the best education that I've ever had. And then after that, I was like, okay, it's time, roll up the sleeves. 2021, full time in crypto, let's get it. And that's pretty much it.
Yeah, I mean the thing about joining crypto, especially in 2017, is that you probably got like scammed quite a lot, right? Because I joined in 2020, 2021, and it was crazy. I mean, because there's not enough education, in my opinion. And like, do you have any let's say instances that you remember in terms of like losing a lot of money because of let's say the wrong URL? Or because personally I bought an NFT mint a day before the mint was actually live.
Okay.
Because I didn't even check the link, right?
Mm-hmm.
So I wasn't educated. That was back in 2021. So is there any instance that this happened, and then why do you think that happened? Like, was it education in terms of like being informed in what scams are there? And because crypto is a whole different ball game.
Yeah.
When you compare it to other industries still.
Yeah, to be honest, man, like I've probably got a different opinion here, and that is that there are more scams today in crypto than there was back then. And what I mean by that is the number of tokens. So in 2021, there was around 430,000 tokens in circulation. Now there's millions of tokens that are launched a month, right? And it's just not sustainable to create millions of sustainable tokens on a monthly basis. So at least the tokens back then, even if they were complete shit, they had the liquidity concentrated on them, right? So you could get into a project and then everyone would find out about it. And it's not like they're being shilled 10,000 projects, which is today's case, right? Back then, it was very limited projects that would be like, this is the next big thing, and it would send 1,000x. So even if it was a scam, you could still make money if the marketing and storytelling was good. So I would say that you're more likely to get scammed now, especially with how easy it is to launch a crypto through all of the launch pads that are out there. Obviously, Pump Fund have played a huge part in this. And yeah, it's much easier for the everyday person to go and launch a crypto compared to 2017, where you had to have real knowledge of blockchain technology and know what you were doing. So in terms of the general scams as well, scammers are getting more sophisticated. Let's not forget the Bybit hack that happened earlier this year. And if you look at the on-chain data, there, in terms of volume and value of scams, this year we've seen some all-time highs in different areas. So whenever you're like a newbie getting into crypto, whether it is 2017 or now, there's always going to be risks like clicking on the wrong links and not having the right due diligence. But in terms of the scam landscape, like we're more hot with scams, whether it's projects being extractors or in terms of actual just scammers trying to hack away at stuff. It's more prevalent now than it was back then.
Yeah, no, since you mentioned Pump Fun, I wanna touch upon that. Personally, I work in marketing, and I've noticed that. I mean, I've joined the market, as I said before, like just 5 years ago, and it was way easier back then to actually find money, let's say, to find investors, to find traders for your project. But nowadays, it's in my opinion, as well as the statistics that I've checked recently, they show that it's really hard for, especially like real builders, let's say infrastructure projects, right?
Yeah,
it's harder for them to get users. So do you think like this whole meme coin, let's say super cycle, although people are losing a lot of money, is like, do you think that's the value extraction that's happening in the industry right now, and that's why let's say big projects that are coming into the space with a whole lot of investments from VCs and everything aren't performing well after joining the space?
I mean, in my opinion, there's not the right value exchange in crypto. And what I mean by that is the guys that sit there and really try to build something, they're often the ones that don't get the reward, right? It's the guys that come and play the game. It's the ones that know how to launch a meme coin and essentially bundle that meme coin or get the supply, control the supply, pump it, and then sell into the chart. These are the guys that have earned a lot of money in the last 12 to 18 months. I'm not completely against meme coins because it is culture in Web3. And if it's a real meme coin project, its utility is almost that culture and the community that it nurtures and what it stands for, the lore it has, things like this. So there's definitely a space for meme coins. But as we know, like majority of meme coins that launch are just purely, never going to go anywhere. They're scams. And plus, it's very hard, unless you've got a lot of money behind you, to actually send a meme coin. So even builders that want to come in and try and create a culture for the right reasons, and they're not looking to just rug, they still might not necessarily make that meme coin a success. It's a very, very hard thing to do, especially when liquidity is everywhere, because everyone's trying to pull in the liquidity. And the problem we have is that, back in the day, all of the liquidity would be on Ethereum. Right now, we have multiple big chains, and liquidity moves between the chains, and you see it all the time. You see the next hot thing that we've seen a couple of times in previous years. Like, I don't want to name names because I respect chains for trying to build stuff, so I don't want to call anyone out, but there's chains that have had a lot of liquidity on them, a lot of TVL, and then those people are going to move that onto the next big chain and the next big one. And then anyone building in that ecosystem is now kind of an expense cost because of that. So there's a lot of what I like to say fragmented liquidity, which makes it very hard for builders to be able to gain attention. And the other thing is that there's so many shiny objects, it's very hard to know where to put the capital. Are you going to try and be a trenches player and just go fully in memes, or could alts take off again? Or is there a new ecosystem to put my money in? Or base is doing well, let me go over there, or this is the next big thing. And there's too much. Back in the day that wasn't the case. Liquidity was mainly in one place, and on top of it being in one place, there was few options, whereas now there's millions of different digital assets that people can buy, and retail inflows are slowing down, whereas the biggest inflows now are coming from the institutional side. And as we've seen, that's going into the top end of the market. So a lot of the smaller builders trying to bring something unique to the space are going to struggle to get any of that liquidity because there isn't the means for institutions to be able to invest in them yet. So there's a gap, and I think it will become bigger and bigger between that top end of the market and the rest. And we've seen it with the market capitalization that's been added to Bitcoin and Ethereum and Solana in the past few months. The alt market hasn't seen that, right? And normally it's Ethereum pumping, and then you see the rotations heavily into altcoins. We might still see that, but the reason maybe we haven't seen it like previous cycles just yet is because the money that's pumping the top end of the market isn't going to recycle because it's institutional money. don't get me wrong, there will be an element of recycling because there are retail in these big coins as well that will then go and fund the rest of the market. But a lot of the driving forces right now are on a scale that are much bigger than we've ever seen. So I know I've just rabbited on a bit there. Apologies, but yeah.
Yeah, no worries.
Yeah, I mean, I fully agree with you. Like, I remember 4 or 5 years ago, if you wanted to launch a token, you would have to pay quite a lot of money to someone who knew like the programming language, let's say Solidity or something like that. And like one of the biggest complaints for people who weren't onboarded yet on crypto was that the barrier of entry was maybe too complicated, like it was a bit difficult for them to join. But now with the likes of Pump Fund, for example, it completely removed that barrier of entry, and everyone can launch a token. They don't need to know anything about tokenomics. They don't need to know anything about crypto at all. I mean, but I mean, this could be like my nostalgia bias, maybe, because I like the 2021 cycle more than I like this recent cycle. And I do feel that I would prefer maybe that there would be maybe a slightly bigger barrier of entry than it is today, because it's just allowing any type of actor to join this industry. And as you said, from a business development perspective, it makes it pretty difficult, because yes, there may be money flowing into the market, but it's being dispersed across all these millions of tokens that are launching on a daily basis. So like my question to you would be, do you think that this barrier of entry should be a bit higher maybe, or do you think that it's fine the way we're going? I mean,
yeah, I mean, the first thing is that you put a barrier to entry in place. That could be regulation, for example. I am an advocate for needing tighter regulation in crypto to prevent certain activities that are going under the radar now that are extraction and taken away from the market. But at the same time, you need to find the balance to let proper builders and projects still operate in a sandbox. Because if every project has this huge barrier to entry, which takes a lot of time and a lot of cost to be able to get through it, then a real builder who doesn't have that money yet, but means well for the market, they're not going to be able to actually come to market because there's too much of a big barrier in place. So one great thing about crypto is being able to launch assets in a digital form with such a low barrier, whereas traditional financial assets obviously have huge barriers, right? And again, the rise of this kind of internet capital market age would not be possible if it wasn't for the lower barriers to entry and the allowance of different participation from what we've not seen before. So there's a balance, right? I think there needs to be better frameworks to cut out extractors, but I don't necessarily think that the barriers to entry need to all of a sudden be made super high, because that's also going to affect the real builders from being able to come through and actually build projects.
I mean, just a few weeks back, me and John had this same exact conversation, and we were like on totally different opposing sides. Because personally, I mean, I like Pump Fun as a website, as a project, as to what it brought to the industry, but how that evolved, I don't like that, because as we said, like the barrier of entry is so easy, so low right now that people can enter, everyone can enter. Personally, I can just, while we're recording this podcast episode, I can just like launch 5 tokens, 10 tokens, 100 tokens, and then one of them maybe, may go up. I have 5% of the supply, I just sell it all, and I rock the people in the community. But the thing is, I think that as an industry, we're still so early that we need projects and tools like this one, so we can stress test the industry, and we can basically just see where it goes, right?
Yeah.
Because without Pump Fund, I mean, how would we know that Solana can handle so many transactions?
Yeah, I guess there's two sides.
It brought too many users.
Yeah, there's two sides to the story. Like, it did Solana a lot of justice, Pump Fund, for the reasons that you mentioned. They had a lot of scrutiny early days in terms of not being able to handle that sort of throughput, and they have proven that with the whole meme coin cycle that's come about. But at the same time, from Pump Fund's position, as a business, what was their actual objective? If it's being able to be a launchpad for builders to bring value to crypto, then they completely failed their mission. because ultimately, if you look at the number of projects that came through Pump Fun that have added value to the space, you could probably count them on one hand, right? Whereas there were millions of tokens launched through Pump Fun. But they carry on. They're still here today, right? They're still enabling this to happen, even though they know full well that it's taken from the space at this moment in time. Now, if there's a navigation in their model to say, right, okay, this isn't actually what we wanted to build something valuable for the space, then why haven't things changed? Why haven't things changed? They have done product development. They launched Pump Swap, for example, but that's just going to put more money in their pockets, right? Where's the development to actually put more focus on allowing people to use the launchpad, but for good means? And the second thing they did was launch a token. There was no need for a token. Absolutely no need whatsoever, right? You've already made hundreds of millions of dollars. Why are you going to take the space for more money, right? What are you going to do with that? So everyone has their own opinion, and that's my opinion in terms of if Pump, like when Pump first came to market, it could have been like, this can go really well, or it might not go well. But I don't feel like they've kind of taken responsibility for what all the platforms ended up being in a way, which I would have liked them to do maybe, and be like, okay, how do we change this so more projects launch through Pump that are actually valuable to the space? How do we prevent rugging? How do we prevent extractors? How do we do this sort of stuff? And I'm not really seeing that. Maybe we see it in the future. Like, I'm not going to completely write them off. Like, we might see that in the future, different features that could see that. But the features that we have seen haven't really come to fix any of the problems that have been identified in their initial product, if that makes sense. So yeah, I like to think, like, with the brand they've got, the name they've got in the market, that they can, and the technology they've already built, that they can navigate that towards adding some real value to the space. But time will tell, and again, this is just my opinion.
Yeah, like personally, I never believed in Solana, by the way, last cycle. And then because it was just going down, I mean, it went down 7 times since I remember. And then for the 8th time, I think it was 2023 or 2024. And I told all my friends, even Dren here, because he's a big Solana advocate. He's like a Solana maxi. I told them, like, it's done for, right? Ethereum's gonna take over the market again. But then Pump Fund, entered the industry, and then they did this huge stress test, and I was amazed. And I'm still amazed by what Solana can do right now. But I think what Pump Fund guys are doing and have been doing, and their whole mission was just, businessmen doing business at the end of the day. Because
they built a phenomenal business in terms of like a revenue generating business. Yeah. Like that's the credit you can give them. Like, they've absolutely nailed it. But yeah, like I mentioned, there's definitely questions in the value that it adds to this space. And potentially what problems it might have caused in this space. But like I said, like I still do think that there's an opportunity for them to be able to, turn this and make developments to make Pump Fun maybe something else. But it's in the name, right? Pump Fun. At the end of the day, like, it's a bit of fun. They didn't come out here to build probably like this really serious builder's launchpad. There's many launchpads that are more on the serious utility scale that have never been able to achieve a fraction of the success of Pump Fun. And that's because at the same time, Pump Fun can just say, well, if we're doing all of this stuff, then why do we have so many users? Why do so many people use us, right? They built a product that people want to use at the end of the day. So there's also that side to the story, and there's always two sides to every story. And that's the other side, right? They're a launchpad that have gained huge traction over other people that have tried to create launchpads just like Pump Fun that haven't been able to reach their level. And maybe that's because they serve a user's interest in this space more than the other launchpads have. So maybe, what my opinion is I'd like to see them try and do something like results tangible based around the number of like good projects that come out of the launchpad and add value to the space. But are they already adding value to the space because of the number of users that use their platform? Who knows?
Yeah, but like, also in my opinion, there's 2 ways to judge whether an innovation is good or not. I mean, yes, the first one would be to look at the metrics, and in the case of Pump Fun, it ticks like all the boxes. But like the other way is to look at the intangible value that it brings. I mean, like as an innovation, what did Pump Fund bring out of the industry? It just brought more meme coins and other token launchpads. Like that's what I have observed so far. I mean, uh, so now, like my point is that we don't just look at these projects, these products, or innovations in terms of what they bring statistically. And now I want to pivot a bit to what you guys have been doing at Magnet. And I have this belief that you have encountered this issue as well, because you may have had clients or projects that have worked under you, and just because, like, in terms of statistics, they would not maybe perform, how do you convince them that it's not the end of the world? How do you convince them that, hey, having this organic community is better than having like the hottest trending token like on Dex Screener, for example?
Yeah, I mean, for me, I think that, well, I put this out yesterday, right? And I said that when I published the Magnet Method, which is a 5-step growth framework in crypto, the 5 steps were marketing-led growth, product-led growth, business-led growth, token-led growth or asset-led growth, and community-led growth. You have to have all 5. And when we saw meme coins rise, there was no product-led growth because it wasn't a product, right? There was no real business-led growth because they weren't trying to scale a business. There was only the other 2 sides or 3 sides, which is marketing and then into the token and then community. So it could still be adapted, the frameworks and areas within those 3 levels of growth for a meme project, but that's not how I think you create huge sustainability over time. Has to revolve around actually building a product that does something in this market. And the perfect example right now is Hyperliquid, because they built a product that has such clear product market fit. And what they did so brilliantly is within their product, the success of that directly puts money back into the token holders' hands through their 97% buyback, which has, taken them from TGE to a $13 billion market cap within 8 months, right? And they're one of very few projects that have gone out there, got solid product market fit, started generating revenue, then launched their token and started to benefit holders. A lot of projects do it the inverse way, where they launch the token and then they try and work something out. The problem with that is if you have no sustainable buying pressure coming into your market through your product when you launch, then all you're going to end up with is selling pressure, right? And the only buying pressure you can bring is based on speculation and hype. It's not sustainable, right? You have to have buying pressure coming through based on actual utility. And we've heard this word so many times, but you actually do have to have that if you want to defend yourself against different market states. Otherwise, you are just depending on speculation and hype. So the crazy thing is, no one really wanted to listen to that too much. When I wrote about it 18 months ago and then published a book earlier this year, but now you see one, probably the hottest project and name of this cycle, they have followed, I'm not saying they've read the Magnet Method, they probably haven't, right? But the point is that they have encompassed every angle of growth. And this is the second thing, which is a lot of founders have the belief that, product and business and the token are separate things. It's completely untrue. One should benefit the other. You're building an ecosystem. And then the final belief that we're always tackling at Magnet is a lot of people think that marketing is going to fix everything. And marketing is growth. Marketing is not growth, right? Because you can drive the craziest awareness in the world, but it doesn't mean that people are actually going to want to use your product and stick in your product. It doesn't mean that people actually want to go and buy your token, because you might have terrible on-chain data that make it not a good place to want to operate in and want to hold, right? So there's so many other things to consider as well. Marketing is very important in growth because it fuels the front of that funnel, but it's not everything. Token is the greatest growth asset because you can leverage network effects and viral growth off the back of that. And like I said, I think product's going to have such an important role in the future of building sustainable tokens in the alt market.
Like, that sounds in my opinion, that sounds really like simple, as simple steps in paper and everything. But how easy would it be in today's market? Because I don't think it has ever been this chaotic. Even with investors, like angel investors, VCs, and everything. Even like projects that have a really solid, perfect product, and they have the product market fit, and like they have everything. How do they get the users? How do they get their name out there, like without being overshadowed by the whole hype thing? Let's say I have a project today, I've been building it for like 3 years, and I start pushing, right? I start investing in marketing and everything, but next week another pump fun alternative, goes live, and there's like billions of volume going around. How do I, as a founder, this is like just a tip to the founders that maybe listen.
Yeah.
Like, how do they overcome that? How do they do it, basically?
Well, I would say this, right? And again, I'll use Hyperliquid as an example. But what Hyperliquid also did is they built their own distribution channels. So their founders had their own audiences. They put the time into nurturing their own audiences. And if you're a project right now, you might want to try and onboard someone who already has an audience, right? And give them some form of incentive in the project. It's doable. So then you have enough organic distribution to fill that early community. And then you put a product in their hands that they start using and they quite like. And then you create the law around there might be an airdrop at a later date. So they continue using, you gamify the use case of the product, you listen to the feedback to keep refining that product so that when they do get the airdrop, they don't just dump it and disappear. They're already using it. And this is what Hyperliquid did so well, right? Hyperliquid post TGE, anyone who dumped hype got wrecked, right? Because they had that sustainable model to continue pushing the price of the token up, and people were happy to keep holding it because they knew how good the platform was and how sticky it was. And then what you get from this is, as a user, you're on that platform, you're speaking about that platform, maybe because you like it, maybe because there's this law around that there could be an airdrop. And then as a project, it's very important that you have a way to sustainably mitigate any downselling pressure from that airdrop. So from Hype's perspective, they could look at it and go, okay, the platform's already generating X amount of revenue. If we stuck that back into the token, and then we look at the potential selling pressure that could come from the airdrop that we're giving out, does the revenue buyback match the potential downselling pressure so that they could hold their chart on token? And like I said, because of the strength in the token, people will still hold the airdrop that they got airdrop now, right? Because it's become that asset. So I guess that's the next stage. Don't just offer an airdrop, think it out logically. If everyone sells this airdrop, are you going to be able to bring the buying pressure based on the sustainability of your model to actually meet that at least the equilibrium to prevent the risk of your token going down? Because everyone knows in this space, if your token's 70, 80% down, it doesn't matter how good what you've built is, no one's going to listen, right? Because we want to, in this space, users have an invested interest in projects. They rarely will just use something just because it's good. It does happen, but oftentimes they're using something because they hold the token, they're a believer. And when you have that, that's how you activate a network effect. Because these guys have an invested interest, they're loving the product, they're getting holder value capture in that from holding the token because you're supporting a good market, because you thought it out, and they're going to continue talking. That creates your future awareness, right? So you don't need to go out there and start spending all of this money on KOLs and so on and so on. If you do these things, KOLs will talk about you for free, right? Because you're performing. They all talk about Hype. Hype doesn't pay any of them because they built something that is worth narrating. So I know it sounds so much, it sounds so much simpler than it is to do this stuff, but that is literally what it comes down to. And it takes a lot of time. And the problem in crypto is that to get that process right is a lot of investment in time resources when there's people around you that are launching a coin and making $1 million in a month. And you're like So why am I going to go on this journey of building something and trying to create something sustainable that could take years and there's no guarantee it's going to be successful, when I could just launch a meme coin, put my time into that, make good money, buy Lambo? This is the problem. A lot of good builders, right? No shit, that come into this space get corrupted because they see that, oh, this guy's not as smart as me. I spent 2 years building something proper and he's just made 10 times my income through just launching a meme coin. I'm going to do that, right? And that's another big problem. So to build something sustainable in the way that I said it is possible. We've seen it play out recently. I've given you an example, but it takes a lot of time. Hype launched a couple of years ago, right? Now they're getting all the headlines. So it's a story of being persistent. It's a story of belief. It's a story of not being corrupted. And it's a story of giving it a good crack. So, yeah.
I agree with everything you just said, but I have another question related to this. Do you think that the user behavior, like the average user in crypto, has changed over the years? Because when I think about it, like a decade ago, people who would join crypto would not be in it maybe just for the money, because who would have thought that, let's say in 2012, Bitcoin would eventually, if you would have invested in Bitcoin, you would eventually reach 100,000 per Bitcoin. Like, people would join because of the vision that Satoshi had and what the movement of crypto represented and all that. And like, even the last cycle, I used to join NFT communities like 3 months before the mint would even happen, because I wanted to be part of that community. I internalized every single project that I invested in. But like today, I have found myself like doing this as well. I would join like test nets. I would participate with the ecosystem and all that, just because I knew that after like the token would go live, I would maybe get an airdrop, not because I cared about what the company represented or what the product actually is. So do you think that the user behavior in general has changed, and why?
Yeah, I mean, when you look at user behavior, something that I do want to mention here is that everyone always talks about, the next million users in crypto, the next 100 million users. What's less talked about is the fact that, and in my opinion, the majority of these users are going to be agentic, right? So it's important as a crypto project to be able to build technology in a way where agents can understand it and can process it and can take value from it. So you will have different markets, is I guess what I'm talking about. You've got an agentic market, which is rapidly on the rise, especially when we look down the line. You've got the Web 2 market that are going to be using, as we've always said, using applications without knowing that they are actually interacting with the blockchain. Then you've got the Web 3 guys, right? The trenches players. And every single user has a different means, right? In terms of how they're going to use this technology, what type of value that they're trying to derive. So when you look at a Web3 user, probably very similar to your mindset, mate, right? In terms of, okay, I like this space, I believe in it, I'm going to use this, and I also know I'm going to get a benefit from it. And that's completely fine, right? Do your thing. I find myself doing the same thing. It's cool, right? We're just intelligently putting our time into places we can get more than one stream of value. Then there's the Web 2 side, and very few have managed to crack this yet, which is putting everything aside and just building something awesome on a Web 3 stack that the everyday person will use. And then there's the final side, as I mentioned, which is the agentic element. So this is building things like APIs, where agents can cooperate with different platforms and draw the value and use them. So I always look at it almost as those 3 stages. You can be as expansive as you want here. But I guess in answer of your question, I think it's always been the same, where the crypto users and the guys in crypto want to try and receive some form of reward, whether it's through participation for an airdrop or whether holding a bag because I'm being active in a community and working for their bag to get a result. Web 2, obviously, just using an application, just using something that I'm going to get value from, regardless of what's behind it, what technology is behind it. And then the final one as well, which I think is going to be a big part of this space's future.
Now, I have to answer to that as well. I know you're the guest, Jake, but I'm going to act as a guest right now. Since back in 2021, I had the same mindset. And I still, unfortunately, have the same mindset for some projects, because let's say like 2021 June, I invested quite a big bag in a project. I don't want to mention the name because I still like them, but they're not performing. And they did a 15x, and that bag at the time for me it was huge, right? But I loved the project so much, and I felt so bad for selling that I didn't even sell. I was like, okay, no, I'm gonna stick with them. They're gonna keep building. They're gonna keep performing. Their token had perfect tokenomics, and it still has. I mean, they didn't change the tokenomics. What they did was they didn't invest in marketing at all. They just didn't do. I mean, I think they were just too comfortable. But let's not get into it. What I'm trying to say is that I lost that money, and now it's like 50% under the price that I bought it back in 2021. 4 years of holding, and I'm 50% down. And now my mindset has changed. Now I think about how I'm gonna find the next 100x, right? And I think most people in the world right now that are trading crypto, they're thinking about the same thing, because you see the TikToks. I mean, let's just be honest. We're young people. When you see the TikToks, everyone's living a lavish lifestyle. Maybe they're faking it. I don't know, but like, there's something in you that says, okay, no, I'm gonna chase 100x, right? And I think that's a really big factor that decentivizes people to build real things.
Yeah, of course.
That's why I respect builders, because they overcome this basically feral issue of the human brain.
Yeah, you have to have life experience. Like, honestly, if I always say this, if I came into crypto as my first business, I would be that dude. I would 100% be that dude. But I did it all when I was younger, man. I'd still like to say I'm young, right? I'm 27. But when I was 19, 20 years old, I was driving around in supercars. And I was living in luxury penthouse apartments in London. And I always thought that that's what success was. The society I grew up in, we'd look at people with a big house or really fancy cars and be like, oh, they're successful. I didn't really understand how deep the meaning of success was until I got a little taste of it. You know, I was never crypto rich, but I managed to have a little bit of a taste of it to realize that this actually isn't what life is about. You know, it's nice to have nice things. It still is today, but that can't be your sole driving factor. Otherwise, it's going to be pretty soulless. And a lot of the guys that you're referring to are younger dudes that have made a load of money and think that's the most cool, awesome thing ever. And that's great. But they're probably going to look at themselves in a few years' time and realize that maybe they wouldn't have made certain decisions that they did to make the money. If you earn really honest money, not by rugging people or launching loads of coins and doing all this stuff, and you want to go and buy those things, do your thing. But you're still probably going to realize that there's a greater meaning to your life. And like I said, that's not to say you can't have nice things. You can, but I learned that can't be the number one driving factor. There's other things that come before that, and that does have a big influence over how you adapt to building. This is the reason why I haven't gone out there and launched any tokens for my own projects or launched a meme coin or multiple meme coins. Because let's be honest, I have the skill set and the resources at Magnet. In the last year, I could have just launched coin after coin after coin and made loads of money. And I know what the outcome of that is. Okay, I now have a better car in my driveway. What does that bring to my life? So what's the bigger thing? Building a growth engine for Web3 that's going to power the next generation of the internet. That's going to bring me more satisfaction and more gratification than a Lambo.
I love this mindset. I mean, I think this is the mindset that every single builder in this space should have. But it's going to be hard to get there.
Bro, you have to learn it. You have to learn it.
Yeah. And
they all say
that's the issue, because most people won't be. Yeah, sorry.
No, I was just gonna add and say that when I was younger, I used to read. I had one business mentor, right, and he was a very successful guy. He just sold his company for 250 million, and he saw something in me, right? And I was, like I said, 19, 20 years old, and he was like, "Don't buy that car. Don't spend money on like these nights out. Like, dial in. You've got something good here. Like, I'm gonna give you my time. I'm gonna like help you get there, avoid my mistakes." I was just like, nah, I'm all good, man. Like, I know I got this game on lock. Like, just because I'd made some money, I was like, nah. Like, yeah, like advise me, but in the other side of my head, you're saying, don't buy that car, dude. I'm buying that car. Do you know what I mean? Like, you can't tell me not to do that. Like, I'm doing that. I deserve that. I've worked hard when I did not. really understand the definition of any of those things. And like I said, you can read it in books, you can listen to it on podcasts, but until you feel it in real life, that's when everything changes. And that's why a lot of people in the space will come in with a very good moral compass and ethics to try and do well. Sometimes it doesn't work out. That's part of being an entrepreneur. I've had many things that haven't worked out, even though I've really wanted them to work out and add value to individuals and so on. It just hasn't worked out that way. But I know that I did it for the right reasons. And at the same time, until you physically feel that, it's very hard to not get distracted. Someone might say, oh, but don't do that because money isn't everything, and you should keep on your building path and believe that you're going to get that long-term reward as when you earn it properly. And it's very easy to say that and listen to that, but when you've been through it, you feel it, and then therefore you can say no to things a little bit easier.
Yeah, and I mean, with everything, not just like business-wise, but unless you experience some stuff yourself, there's no other way to learn. We can, as you said, we can do podcasts all day, but at the end of the day, you will have to get scammed yourself to know that you're not supposed to click that URL, for example. Now I want to ask you something else, because both Otis and I have worked for Web3 startups in the past, and we've seen how different like the environment within the startup, like the whole feeling is when there's a bull market and when there's a bear market. Like everything is euphoric on the bull market. Like you get all these promises by the founders, by the CEOs and all that. But like then bear market happens, and yes, the last bear market, like post FTX, there was a lot of reasons to have FUD and to have like generally like fear in the market. But like a lot of builders got cold feet from the entire industry. They didn't want to do anything anymore with crypto because of how big the fall is, because the higher you climb, the bigger the fall is gonna be, right?
Yeah.
So how do we convince like these builders, and I know that like let's say 50 years from now everything will be much more consolidated like for the industry, but like how do we convince these builders that Web3 is the place to be, and that they should like try and survive as much as they can during bear markets, because it is worth it. I mean, we've seen with different projects that has been the case.
I've actually felt the pain or seen good builders drop out of this market. The first or one of the first projects I had to grow for in crypto had two very talented builders, the bright sparks in that company by a long way. And those two individuals, one of them is now in agriculture and the other one is in Web2 tech. So, they have their own reasons for doing that. But I do feel like a big factor is that you come to crypto, you get over that cold start, you get over the fact that people can own things digitally online. That's what's really, a really compelling and why you want to build in this space. The extra value add that it can bring to an existing, say, Web2 stack. And then, like you mentioned, you get to a bear market or a bad market, everything goes down, and then you're the most hated man in the world, right? And all you've tried to do is build. Deep down that you're trying to do things for good, and you're getting people calling you a scammer, and you're like, I don't need this. I don't need this. I'm going to build this without the Web3 element, and I'm just going to launch it through there. So I do agree with like the point that you made in terms of how we bring those builders back into crypto. We need more projects that create sustainable growth loops. Like none of these guys were involved in the token or the product to a high level. So they were not, so when, one of them was in operations, and the other one was just a bit of a maverick, done a bit of everything. But I guess where they didn't have that control, they were just getting, let down, I suppose, or feel let down by other members of the team. So I do feel like there has to be an element of improved models on how we approach crypto, because the current way that a lot of projects launch or approach crypto through different things I've said in this podcast do not lead to sustainable growth over the long term. And then at the same time, I do think that the higher level of the market, the belief that we're getting on a institutional level, the sort of movements that are being made on a macro level as well in inclusion of crypto are big things for the industry, and that goes to show that this market's not going anywhere. It's going to be here in 10 years time, 20 years time, however long it may be. There's people bigger than us now that are involved in this. And that might be another thing. They might have thought, oh, I'm going to get out of this because it's not going to amount to anything. But now you get that bigger belief from the biggest players in the world, and that starts to change a little bit. So I guess that's probably the couple of factors that have to be played out.
I mean, by the way that this market is treating me right now, agriculture looks like the best option for me as well. I mean, I don't blame that guy. But yeah, I mean, since you mentioned that this market is here to stay and it's not going anywhere, just to wrap it up, in terms of growth and I would focus on the alt market, right? Because that's where like the real builders tend to be. What do you think will be the space? I mean, how will it evolve past these 5 years that are upcoming? Let's say 2030, right?
I think the first thing as a builder, you have to have a longer term view now. Like you have to believe in or re-believe in where this space can go, and try and zoom out a little bit rather than just being in the everyday trenches. It's important to look at and make predictions and have conviction around where this might be in 1, 3, 5, 10 years time, and how much value you can create in the space for then. We have such a short-term mindset a lot of the time in crypto, where we're looking at when's the next cycle, when's the next pump, when are all these things happen. You don't zoom out enough and look forward at where this market could navigate to. And I think if a lot of people did that, they would create plans past just trying to survive in this one cycle and start looking further ahead at building a sustainable growth strategy, to be able to let people try and go after the easy money now, or it's not really easy money anymore, but you get what I'm trying to say. Stop focusing on the short wins, you're focusing on long-term wins, and it's going to pay off eventually. So that'll be my number one thing. And the second thing is, don't believe that the models of how people launch tokens now and try to grow projects is correct, because fundamentally most projects are unsustainable in their growth, and they are moving cycle to cycle, waiting for that little hit of liquidity, and then that's going to help them last another 3 to 6 months. They're not built on sustainable foundations. So it's very important to, even if it's going to take time, it's going to take more hard work. If you want to be around, you need to put the thought into these things. And the third thing is, your launch, if you're a crypto project and you're launching a token, is so important that you shouldn't rush it, and you should really map everything out pre-launch. Because I spoke to founders. I spoke to one founder, right? This is about 4 months ago now. Got introduced to him. He was their CMO, had a call with the project. He was like, okay, we're doing this. This is our launch plan. I said, dude, this isn't going to work. This is not sustainable. Didn't take it too well. And then he was like, oh, look, we'll see how things go. We've locked our launch in now. We'll come to you post-launch. And I was like, respectfully, like, don't come to me post-launch. Because I know you're setting yourself up for an extremely difficult job. And that token's like 87% down or something crazy from launch in like 3 or 4 months. So that's my third point, is really put the thought and detail in to how you're going to grow this thing. Don't sell yourself short by giving a chunk away of supply to a certain KOL to try and get that short speculation, or giving insiders too much so that they can make money on launch and then leave you in a harder position, or launching before you can actually create something sustainable, or launching as vaporware and not actually having a sight at how the product's going to play a key role in your ecosystem. So I think that's to the people that are kind of pre-built. For the people that are already post TGE, then it's really understanding where you currently are, what your KPIs are, not just short term, but also long term, and working out a plan on how you get to them. And then all of this stuff ties into one word, which is conviction. That's it. Believe in your plan, believe in your strategy, and believe that it's going to play out, and forget the noise. That's the main thing. If you look at someone like Murad, this is a different field, by the way. This isn't a builder's field. But, the dude was the biggest success story maybe 10 months ago. A few months after that, his portfolio is down, 30 million or something like that. And everyone's like, oh, this dude was crazy. And he's still posting. He's still working for his bags. He's putting TikTok videos out. Conviction, conviction, conviction. And now, a few weeks ago, his portfolio is at all-time highs, and everyone's like, "Oh, there's a lesson in there." He believed in meme coins. He believed in the meme coins that he held, and even through the tough times, he stuck with his strategy because he put the thought into it and was happy to have that conviction, and he stuck with it, and he obviously got the return. Whether he realizes that or not is up to him. But the point is, there's a lesson there around having conviction, zooming out, looking at the future, and really putting the thought into everything that you do.
Yeah, I mean, I think it's become the word conviction has become so alien to Web3 and crypto in this cycle, in my opinion. I mean, Murad is only one of the many, like very few people that are actually convinced and have conviction on their bags. But yeah, I mean, Jake, thank you very much. I was more of a listener to this podcast because I literally learned so much. I'm gonna probably be ordering like the magnet method and read it for myself as well. And
Appreciate
yeah,
it, man.
thank you for your time. And yeah, we'll probably hop on another episode as well sometime in the future.
Yeah, for sure. Yeah, look, I really appreciate you having me. And one of our growth engine rooms at Magnet is our laboratory. We invent different growth frameworks and methodologies for crypto projects. So we have the Magnet method, we're the quadfecta of crypto growth. We have the fairer launch, token product fit, a few other things on there. And you can just go and get the PDFs for free. So if you want to learn like how we see growth in crypto, then go to growwithmag.net, go on the laboratory page, and get some PDFs for free. And I hope that they help you in your journey.
I mean, I'm sure they will. I'm 100% sure they will. All right.
Look, gotta have conviction, huh?
Yeah. That's how we work.
Exactly,
right,
man. But yeah, I really appreciate you guys having me on.
Perfect. Yep. All right. See you, Jake. Have a good day.
Awesome. See you guys.
It was a nice episode.
It was a nice.
It was.
It was simply lovely.
Splendid behavior.
I mean, yeah, it was one of the most insightful discussions we've had so far.
I was surprised.
I think we say this about every episode that we have, but genuinely, this one, it's like if you want to be a founder or if you're like a crypto user, if you listen to this episode, there's a lot of stuff that you will finally understand.
Yeah, but I think the reason why we loved this one so much is because we also learned quite a lot of things, and then the second reason is that Jake didn't have anything to shill, right?
Yeah,
he just had things to tell people based on his experience and his expertise and his area of expertise. So, I mean, that's just my opinion. Again, I think that was the reason why. But what do you think in terms of growth? Because we discussed all of these things. But do you think meme coins are the issue? Do you think platforms like Pump Fun are the issue? Because we couldn't really get into it, me and you, because when we get into it, when it comes to Pump Fun, it lasts hours.
As an economist,
yeah.
You would have to look at tons of different variables.
This guy was a valedictorian, by the way.
And you would have to see how each
This guy was a valedictorian.
variable would impact,
Yeah. Pen and paper.
There's a lot of factors that come at play, and it's both from the user end but also from the product end, right?
Yeah.
So I'm not really at liberty to say what's the main reason.
Of course.
But it does help the fact that the most powerful man in the world, the president of the United States, did launch a meme coin, which then trickled down to the rest of the market and led to this massive spree of bullshit token launches, both from influencers and normies and so on and so forth. But yeah, you get my point. We've done this discussion.
Yes,
before.
but now I didn't say this. What I'm about to say now, I never said it to you. The Trump token, I think it caused the 3-month free fall that we had for altcoins in the whole market back in late January, February, March.
Mm-hmm.
I think that's one of the main reasons. It was
No, I'm not talking about how it impacted the prices. I'm talking about how it impacted user behavior.
I think it was
because
user behavior was the same.
No, because if you look at the amount of token launches that happened after the Trump token, I'm very confident that it's quite a lot more than what it was prior to that. Because
I do know why you're wrong. Sorry to say this. on
I mean,
live
don't
TV.
look at the last couple of months
No, I'm
because
gonna look
we've
for
seen
2024,
less traffic
2025.
on token launchpads. But yeah, look at 2024,
For the first 6 months, I'm gonna do it easy for you. Analyze. Okay, I'm gonna ask ChatGPT, my best friend, the token, the oh my god, this for the first half of, oh my god, 2024 and 2025, and compare them. Focus on meme coins. Bro, you had 1 million tokens a week on Pump Fund back in 2024, March and April. You had like the biggest number ever. Yes. So,
it all depends what source you look.
CoinGecko data
Okay.
shows that new token launches, including many meme coins, were extremely high in early 2024. On February, we had 200 or approximately 200,000 new tokens. March, again, 200,000. And that was the renewed meme coin season. Now, PumpFun, a major Solana-based token launchpad, reported that in the first half of 2024, over 1 million tokens had been launched through its platform. Imagine that. 1 million tokens. Our country has 1 million people, by the way.
It says here that approximately 5,300 new tokens launched per day in 2024, which is roughly around 500,000 tokens.
Okay, no, I may have been mistaken.
And
because
as of 2025, there's like
yes,
it's the projections says like from 37 million, it's projected to go to 100 million.
Let's keep it simple. In 2024, it was 1 million. In 2025, it's 6 million for 6 months. You're right. That's why you were valedictorian and
No,
economist, and I'm a political guy. So, sorry, guys.
Shall we wrap it up?
Let's wrap it up. Okay. Thank you for being part of this episode, and the special thanks goes to Flash Trade. Have you ever traded on Flash Trade? Have you had any new trades on Flash Trade?
I have. I don't want to go
Yes,
and
lose
talk
money like I
about
lose
my
money.
P&L.
There's no P&L. It's non-existent. Is the P&L in the room with us right now? Okay, we love you guys and have a good day.